second part of the weekly accomplishment sheet training that we need to cover is we've talked already about what these columns, these headers mean and what numbers you put in there. Let's talk about where those numbers go and what we do with them. So I'm going to continue to work off of, sorry, that's the example sheet, I'm going to work off of the instructions sheet that you're going to find on the Top Bananas website. So let's take a look at that together. We've filled in all of our information up here. Let's assume this is your first week in business. So if you look down toward the bottom of this sheet, you'll see 3 rows that say this week's total, year-to-date total, and new total. It's your first week in business, so we can guess that second row, year-to-date total, is probably going to be 0. You haven't made anything yet at this point. So zeros are going to go the whole way across that second row. The first row, this week's total, will be a total of everything that happened up here. So all those numbers get totaled down into these sections. So if you had 2 parties and with a total of 12 faces at the 2 parties, those 12 faces are going to be listed right here. And so on. You're going to do that the whole way across. You'll see on this right side, right here, it's B, C, D, and E. And those are just letters so that you can see whatever numbers end up in those spots get transferred down to this section where the corresponding letter is. So that and the other thing you'll see is right here there's a darkened square. That is where your skincare class, your facials, and your reorders all come down to. And of course we know those are our total weekly sales when we add those all up. So that's why there's arrows that come in here, and that total gets totaled right here in this section that says A. It says weekly sales total less tax, total of classes, facials, reorders, and miscellaneous sales. So that total goes in A. So since we know that this letter is an A, we know that whatever number ends up there goes down here where there's also an A. So that's the first thing we would do. Pull your A down here, whatever's in B, C, D, and E all come down here. Your next letters you'll see beside it are F and G. You're not going to see an F and G anywhere up on this page. These are your new totals that you're gonna figure out yourself. The letter F, you'll see that says 1 to 3% of A to cover your incidental section 2. And that's a really good idea. I just stick with 2% all the time. 2% of whatever your weekly sales total was, less tax. Let's say that you sold $1,000 for the week. 2% of that is going to be $20. So that would go right here into F. The reason for that is the more sales that you're making, the chances are good you're using a lot more samples, applicators, trays, mascara wands, all those kind of things. So we need to have some kind of money in there to account for that. 2% is just the number that we use. It just really works out well that way. If you find that you're giving away like a lot of samples, you might want to bump it up to 3%. If you're bare minimum and you're really like making a lot of sales without giving a lot of stuff away, maybe you're doing a lot of reorders and not a lot of classes, you could probably get away with 1%. So just kind of make that judgment call yourself. So that's going to be what F is. G equals the amount that should be reinvested. So this is going to be your new total. So what you'll do, if we just take a look now at the example sheet, you'll see that in this example, we had $500 in total weekly sales, because that came from A. These 3 added up together makes A. A comes down here, and that's your 500. So B, C, D, and E are coming from over here. And you'll see we had $30 in sales tax, $4.24 in section 2, $130 in product given away, retail value, and $7.80 in non-recovered sales tax. Those all 4 get transferred right here. Now, you'll see in between there is one little square that it says at your cost. It is not labeled with a letter. The reason is that we are figuring out our cost of making that weekly sale, the weekly sales total. So if we sold if $500 worth of products went off of our shelf, it cost us $250 to purchase that product. So $250 is going in this right here. So it would be A, and then this would be your 50%, you know, whatever it cost you to get those products, and then we have B, C, D, and E. I hope that makes sense to you. If you're looking at the paper, it's going to make a lot more sense. So all these numbers get in here, and then you just follow the little diagram. So it would be your cost, $250. You then add your sales tax, which is $30. Add your section 2 cost, which was $4.24. And then the next thing that comes in here is your D over here, which was your retail value. We also need to find out what that cost us to give away. So rather than just plopping in our full retail value here, we're going to divide that by 2. So if we gave away over here $130 retail value, really what this becomes here is $65. I hope that makes sense too. So now we've got 250 plus 30 plus 424 plus 65 plus the non-recovered sales tax, and then the next one is that new number that we came up with, the 1 to 3%, that's going to tell us how we cover our cost of incidentals. The final column then is your grand total, in this case $367.04. What that means is that's the amount of money that needs to be reinvested in your business. We're finding out what did it cost us to make this money. And so this amount needs to go back into your bank account. That is used to place your next inventory order to replace the products that you sold, and then it's also in there to create that buffer so that you've got the money to pay for your Section 2 items and other things that you're going to need in your business. So now we've figured out this whole section. These two squares are to help you figure out what your actual paycheck is to yourself for the week, and that should be pretty simple. If you just look at it as your weekly sales was $500 plus your sales tax of $30, that means that you had a total of $530 that came into your business. So if that happened, then you want to, that's now your money taken in, $530. We're going to now subtract the amount that we decided we had to reinvest. So you're subtracting G. So the amount brought in, $530, minus G equals the amount to reinvest, which is what we call H, and that's $162. I'm sorry, this equals your business income. Hope I didn't confuse anyone. $162.96. So that would be your paycheck for the week. Hope that makes sense. Okay, I think that I remembered everything on here. So if anybody has any questions on this, it's really just easiest to answer them one-on-one, but this example sheet is so helpful. Now the one thing that I didn't cover is over here this square says year-to-date excess free product. That's where you're supposed to track where you got free product and, you know, subtract that away and you're actually not losing money and all this stuff. I don't personally track that because in your income tax, that all can kind of, what they call, come out in the wash. If you know that you had this much product come in and you can track it on your order sheets, it shows how much was free product, how much was this, how much was that, then that all just kind of, like I said, comes out in the wash. I figure I'm looking at this as a worst case scenario. That free product that I got is just extra money in my pocket. And if I don't know it's there, I'm not that upset about it because I know that it's creating an extra buffer for me. So it's up to you. If you're very detail oriented and you really want to track this, by all means, it's not a bad thing to do. So if you have any questions, please contact me directly.